Mm. All right, good evening and welcome back to yet another session where we will apply the elite wave counts and try to find out high potential trade setups across Euro USD, dollar index, pound, gold, Bitcoin, Dow Jones, crude oil, and any other charts that you may want to analyze. This is your host Harsh on behalf of GTCFX. Once again, a warm welcome to all of you. Uh, so we've got participants joining. Thank you, dear brother Matthew. How you too have a good day. So once again, a warm welcome to those who are joining us live from YouTube as well. And let's get started with the risk disclaimer to begin with. Okay, we've been joined by brother Anthony as well. So. Welcome, Mr. Anthony, and Taha. Brother Taha is also here now. All right. Let's get started off with the risk disclaimer first. All right. Over the counter margin derivative contracts, including contracts for difference and spot foreign exchange, are complex instruments and they come with a high risk of losing money rapidly due to the kind of leverage offered. You should consider whether you understand how these products work and whether you could afford to take that high risk of losing money. Independent professional advice is highly recommended before any kind of investing or trading. And this webinar serves an educational purpose, will not include any financial recommendation or advice. Thank you. All right, sir. So let's get started off with the first chart. I'm bringing up the charts. Please kindly confirm if you're able to see it properly. And I hope that the audio is also clear. Also, for those who are joining from YouTube, please feel free to write down your queries or questions that you may have during the sessions. While I have a habit of toggling in between, I'll do my best to answer your queries as well. All right, sir. I hope that the chart is visible. We'll start with the euro as usual, and after a wait of quite a few trading sessions, now the first high probable. Okay, thanks, Anthony, for confirming, and I hope that all of you are good with the audio and the charts. Let's get started. Now, euro dollar index, pound, followed by gold, all four are extremely high potential trade setups that we are going to discuss today. And straight away, we've got entry points right in front of our screens now. So we are not going to have to wait now because price action is uh, exactly where it has to be, and it has been a waiting period for about 9 calendar days since the 11th of March. But now we've got them all. Okay, we've been joined by Isaac as well. Welcome, Isaac. What I'm doing here is a large degree wave count of a of a minor level, which is clearly indicating an impulse higher. Now we know what's an impulse, followed by a corrective wave decline. You know what a corrective wave is as well. It has taken several years to complete this pattern, And now what we are seeing is an extension of the pattern. So it's 5 up followed by 3 down. Bottom was formed on 13th of Jan, and now what we are seeing is an extension of a potential 5 wave rally. The third wave is extending as usual. We also know what an extension is now, and I will show you what a classic example of an extension is going on right now. So we are ideally headed, please keep this bigger picture in mind, brothers. We are ideally headed towards 1.1275 and higher levels before this pattern completes. Believe it or not, we've started analyzing or started giving buy calls specifically from the second wave here from 1.00200 levels after 13th January bottom was formed around 1.0177. All right, so all the action is now lying on the right hand side, and we will now go on the 4 hour chart and print the wave unfolding there. Okay, I will remove the orange arrow and we'll try and zoom in as well. So there are 3 degrees of waves forming here. For the first chart, I'm going to do it in all details. It's not required to be done in the dollar index possibly because it's almost the replica on the opposite side. On the first degree that we would like to emphasize is it's working on a minute level. It might be working on a minor level as well, but right now we prefer to print a minute wave. Now, minute wave 1 and 2 are in place. Minute wave 3 is going on. Within the minute wave 3, there is another level of lower degree, which is minute wave 1 and 2 in place, and minute 3, 4, and 5 are. Uh-oh. So we've got minute 1, minute 2, and 3, 4, 5 unfolding. Yet again, one last degree, please. So you understand what an extension is exactly. Now, if you so we've got 3 degrees here. I'm just taking a few more seconds. That is a sub-minute degree. A few more seconds, please, and we will be on our way towards finding an exact trade setup. All right, so minute 1, minute 2, 3, 4, 5, still in progress. Okay, and one step lower, that means it's grandfather, and then father, and then son. Remember the fractal nature of the market, smaller degree waves continuously are working to form one larger degree waves of similar pattern. So what we are seeing right now is a sub-minute wave 1, 2, 3, 4, almost complete, and sub-minute wave 5 is expected to head higher to complete the minute wave 3. All right, so let's find out exactly uh, because I've seen that the fourth wave has almost completed. This pattern is an expanded flat. That is an expanded flat which looks almost complete. It is also possible that it drops towards the 38.2%, but right now it is taking the 23.6% Fibonacci support. It's it's taking support from the 23% Fibonacci. It is quite possible that it drops towards the 38.2% as well, but we would not want to wait until that. Now, if you were there in the last session, we were waiting for prices to decline all the way towards the 800 mark, and that's what exactly happened yesterday during the New York session, and we are now back above 850 mark. All right, so ideally, it is a good place to go and buy potentially if you're interested on the long side. There is no need to further wait as prices have touched the 23% Fibonacci retracement already. All right. So the first potential, writing it down as the zones here, that is already a potential buy for us now. We can go ahead and do it right away. Now, if you remember the rules of the impulse wave, when we are trying to when we are trying to enter during around wave 4, we can afford to place a stop loss around termination of wave 1, correct? So that is where we are proposing the stop loss, and the targets are to be print here. Those are I'm printing the targets as well. 1.080050 entry, 1.0500 stop loss. The potential buy entry is around 800, 850 zone. Stop loss is around 500. And the target for the first minute wave are up on your screens now. And those are the simple targets, not the Elliott wave extensions, 1.1120. Believe it or not, prices are not going to drop, prices are not going to stop or should not be ideally stopping at 1.11, because when it reaches 1.11, that will be just about the orange wave 3 to simplify. And then you've got orange wave 4 and 5 to complete higher, which would be the circle wave 3, and then we will have circle wave 4 and circle wave 5 to complete. By the time all the waves are complete, ideally Euro USD should be comfortably trading according to the Elliott wave principle above 1.12 All right. I just had a small glitch in between. Kindly excuse me for that. We are back again, and let me give me a moment, please. Thank you all for staying there. Could you please confirm if you are able to see the charts now, please? Could you please confirm? Kindly, could you confirm if we are all together now? If the charts are visible, please. I just had a small internet glitch, but I'm back now. Thank you so much. Thanks for staying there, and kindly excuse me for not controllable. Actually, the net connection did drop, and I could manage to connect through my mobile immediately. So what I'm trying to say is, it took us almost 11 calendar days to get back on track now, and we don't want to miss out on this opportunity because this is the last bus, I think, before another 400, 500 points of rally back towards 1.11. It could possibly move straight away towards 1.12 if minute wave 3 is already in progress, all right, and not the subdivisions. So ideally, uh, Euro USD is a high potential buy around the same price with the stop loss 1.05. Potential targets 1.11, 1.13, and 1.15. All right. For those who are joining from YouTube, I hope that the connection is fine and it should be restored in a few seconds. Please, let's continue. The dollar index. Okay, the dollar index is also it's a classic example of five down followed by three up. So that is the five wave decline. I need to change the degree to minor, followed by a corrective wave up, and the corrective wave actually rallied all the way through the 61.8%. Now I'm going to show a bigger picture. Just a moment, please. Ideally, when you have such a scenario where the market has dropped five waves and it has also corrected three waves on the opposite side, ideally what you see is an equal in magnitude, but five waves decline towards the major trend. Now the major trend is down and the corrective wave is complete, and we are now heading towards an equal magnitude five waves lower. And a, a good enough way to find out is the Elliott channeling. And the Elliott channel is showing that prices are expected to drop lower towards if you see the convergence level, even if we expect that the market is going to drop straight in line, the convergence is showing around the 95 mark. Please note down, we are trading at 103, 104 right now. The story already began, it's already started from 110 on 13th of January. We are midway right now, and expected convergence is at around 95 mark. All right, so please keep this bigger picture in mind. Dollar index, after printing that couple of years of high, it was just a corrective wave, and now the larger degree trend is resumed on the lower side. Even better situation is now because we are exactly at the price where we should be at a lower degree wave 4. Now, I'm not printing all the degrees here, but these are also 3 degrees. Wave 1 minute, wave 2 minute, again wave 1 minute, wave 2 minute, and then wave 1 subminute, wave 2 subminute, wave 3 subminute, and wave 4 subminute is right now processing. All right. And the retracement of those are right in front of your screens. The 23% has been almost tested, close to 10377, and the extensions are up on your screens now. So the first extensions should be towards 101, and further, it's not going to stop ideally towards 101 because there are minute waves 3, 4, and 5 to be completed. So it's going to go much, much, much lower than that. It's actually going to go like this. Another, there are almost another 5 waves left. By the end of the fifth wave, we should be comfortably trading below 99, possibly towards 97 and 95 respectively. All right, so the second high potential trade for the day, for which we have again waited almost 2 weeks now, is potential sell around the current price. The stop loss is around 107, and those are the targets. Those are the target potentials. Please remember, target is not just 101, it is just the first stoppage. It's actually heading towards the 95 zones. All right. So if you take it in a positional manner, it's going to be highly beneficial on the short side. All right. Dollar index is expected to continue its weakness. Now, the next we can pick up gold. The counts in gold are already done because we've been following gold meticulously since last several weeks now, and these are the wave counts potential, a larger degree wave counts up on your screens right now, where we've got gold actually progressing within the fifth wave of minor degree is progressing. We've got minor wave complete here. I'm putting the dot there. Minor 2, minor 3 is again an classic example of an extension. Minor 4, it was quite sharp. We were expecting it to be an expanded flat, but it's now restated. We've adjusted the counts there. And minor 5 is unfolding. Now, according to the theory, the fifth wave should again unfold into 5 waves. So minor 5 is again unfolding into minute 1, 2, 3, 4. And minute 5, fifth wave is progressing. Once again, minute 5 was also subdividing into 5 waves. And within that 5 wave, we've got wave 1, 2, 3 complete. And we are possibly looking for a wave 4 decline right now. All right, let's zoom in a bit. So that was minute wave, that was the third wave of a lower degree. We are expecting price action drop lower towards the fourth wave, and the expected price action for wave 4 is 2990. I repeat, sir, it is about 2990 wave 4. Ideally, wave 4 should terminate around the 29.90. Now, trading point of view, there are two aspects. One is the aggressive aspect, and the second one is the conservative aspect, which is towards the trend. So, if you are inclined, ideally it's not suggested, but if you're inclined to take that small cut, we had suggested going short yesterday during the Hindi live around 45, the stop around, the potential stop around the 3060 mark and targeting around 2990. That trade is still on, and it is trading at 34, 10 points lower than what we suggested yesterday. Even if you go short right now, potential stop loss would go at 60, and the target would be around 3000 and 2990. But again, let me remind you that would be an aggressive strategy. A conservative strategy would be to remain flat for now and wait for prices to drop towards 2990 or maybe 3000 mark. That would be a high potential, high confident trade setup towards the larger degree trend, which is already up. And the target potential entry, stop, and the target potential are coming up on the screen now. We are suggesting that you try and take long positions around the 2990 mark. So potential buy, I would be printing here. That is a safe way to trade towards a larger degree trend, which is up. Stop loss would go just below that wave 1 top, which is 2936, 29, you can place it around 2930. And this target, this particular wave target is extending towards the 3130. And tell you what, 3130 is just a number of this particular wave. Normally in gold, it is seen that the fifth waves are quite a bit extended. And if we go by the daily chart setup, and where we are trying to extend the entire five-wave rally, which started from October 2022, then the upside potential are here up on your screens. You can see that first target is almost met around 2980, and the second target is around 3264. So if you get a chance to grab gold around 2990, 3000 levels, then it would be a good idea to carry it forward all the way, not just towards the 3100, but all the way towards the 32s and 3250 zone. All right. This would be an extremely high potential trade setup around 2990, 3000 potential buy, 2930 stop loss, and potential targets around 3150 and 3250 respectively. All right. So that is the story in gold. We have one more high potential trade setup, please, and that is for GBP USD.
Mm.
Believe it or not, GBP USD is one of the most resilient pairs if we compare between euro, dollar index, and pound, because the corrective drops are absolutely shallow, where the structure remains up similar to what we discussed in the euro, but the corrective declines are very shallow, and we are. I'm just mentioning the larger degree or minute degree five waves, which are could be underway right now. So again, this is also a very high potential trade setup. The only problem is the corrective declines are very shallow. So And believe it or not, we've been waiting for price action to drop towards 29, 29.50 around 11th of March, and only drop we're now seeing around is 29.42, not below that. So potential buy could be around the same zone, but I will extend the zone to 2800 as well, which is the 38.2%. See, the Fibonacci ratio between wave 3 and 4 lower degree is that wave 4 normally settles around the 38.2%. But since these are very shallow corrective declines, we would also consider 23%. So potential buy zone is between now and 2800, sir. And the stop loss we would recommend, again, don't place it around the wave 2. You can go and place the stop loss just 1 point below the termination of wave 1, which is 2500. So 400 points of risk, but the reward is not just 3200, which is now coming up on your screens. It is not 3200. I mean, 3200 is going to come, of course, but ideally prices are poised to go and print a new high above 3400. So, see, structurally, what GBP has done is even better than what Euro has done. It has produced an expanded flat. Now we know what's an expanded flat. Wave B goes and prints a high above wave, the initial point of wave A. That was a bull trap, and then it has now corrected neatly, almost equal to the termination point of wave A, almost equal. And now 5 wave rally. Now this rally has to go and terminate above 3427. So kindly make a positional trade targeting above 1.35, sir. So it's about 600 points of potential profits versus 400 points of potential risk. And even lower, if it drops towards 2800, it would not be a bad idea to go and add further. All right. So that is the story in pound. So four high potential trade setups that we've just discussed, and we've still got time. I want to bring up Bitcoin. If you'd be interested in knowing what Bitcoin would be or is expected to do so, the recent structure in Bitcoin is 5 waves lower. It is print 5 waves lower at minute a degree. That was a triangle and maybe a fifth wave here. I'm just changing this to find. If you do have any other charts to be analyzed, please feel free to let me know, please. And what Bitcoin could be expected to do in the next few trading sessions is, see, after a 5 wave decline, ideally it should be producing a 3 wave rally. So we are expecting an ABC rally to materialize, out of which wave A is in place, wave B could be dropping lower or a bit more possibly, and then wave C going towards 95. If you observe this 5 wave decline followed by a 3 wave corrective rally, which could which could reach 95, 96,000 levels. Possibly it could also go towards 100, 102. But this is 5 down followed by 3 up. It's not towards a new high, sir. Most people, most traders would want to believe that the bottom is now in place around the 75, 76,000 mark, but it could not be the case. It could be the first, it could market is trying to tell us something by dropping five waves. It could be telling us that I have completed the first larger degree move and now I am correcting myself three waves higher. So 95,000 would be a great resistance, a potential resistance. So ideally, that would be a potential sell. All right. And the stop loss would be above 109 or just around 109. And the target is, or should be rather, below 76. So if you'd want to position yourself in Bitcoin, rather than going or initiating longs, it is absolutely possible to take a long call here. Aggressive, that is an aggressive trading strategy. Potential buy, stop loss around 76 and targeting 96. That is quite possible if you're an aggressive trader. But if you are wanting to trade towards the trend, then ideally wait for price action to reach 96,000. That would be a good potential sell with a stop loss about 109. Target potential is not just 76, but if I give you a meager target, it would be around 70 or 50,000, 63,000 and 50,000 respectively. There you are. So these are the potential targets by, I mean, the time frame is, of course, it's not going to be 1 week or 2 weeks. It's going to be several weeks, which begins after price action reaches 96,000. All right. So if you're trading Bitcoin or if you're wanting to potentially invest in Bitcoin, to think or consider that Bitcoin is bottomed out around the 76,000 mark would be a bit earlier. So, investment point of view, you should be considering a few more months actually after the price action settles down around the 55,000 mark. It could drop even lower, but that would be better than what it is right now. A trading point of view, both sides can be done aggressive long towards 96, but I suggest potential sell around 96, stop 109 and target 55, 56,000, or at least below 76,000. All right. So that is a story in Bitcoin. Another story is very interesting, which I would like to again describe, and it is global equity markets, and the leader of that would be one of the leaders would be the Dow Jones, which we have been waiting for several months actually, for several months, weeks actually, right from the December 22 24 highs. The Dow Jones has print an impulse lower where we've got wave one, there was a triangle wave two, all the way wave three, sharp wave four and five. So the first impulse is complete. Again, five waves are on the lower side, sir. So market is telling us a story that it has completed the first wave on the lower side. What we are seeing right now is a corrective wave expected to go towards 43,500. That is just a correction. So ideally, if you're wanting to trade, potential sell around 43,000. Potential sell, I'm not writing it down, but I'm moving my pointer here. That would be potential sell around the 43,500 mark. Uh, Potential stop loss around 45,500. And the target potential is going much, much, much lower than what we are seeing right now. It's towards 35,000 at least. I repeat, sir, target potential towards at least 35,000. We can do that extension right away. Now, those who are joining new, those who are joined fresh, and wanting to look out for the videos of the past that we have done, please kindly write an email to me at Harsh. I'm giving my email address right after the session. But send an email to me, please. I will give all individual videos. I'll send all individual videos. We have created a YouTube list as well, but it might not be an up-to-date one. I will send both individual and the YouTube playlist. So 37,000 is potential target for Dow Jones. Please pay attention to what the markets are telling us. It is a story which can easily replicate the Great Depression that we have seen in 2008. In fact, it can also remind us 1929 drop. Yeah, thank you, Mark. No worries at all. I remember, and I will send across all what is required to be done. All right. So I think I wanted to bring up all major charts which we have done, and we can bring the current session to a pause now if there are no other charts to be analyzed. If you want me to analyze any other chart, please let me know kindly. Or if you want to ask any question, please let me know. Otherwise, we can bring today's session to a pause. This is my email address where you can shoot an email for any feedback that you may have, any suggestions that you may have, any queries that you may have. Uh, I would be more than happy to get back to you and in less than 24 hours, of course, with all the queries that you may have. harsh.chappy@gtcfx.com. All right. So, with that note, let's bring today's session with God's grace to a pause. And once again, thank you. First of all, sorry for a slight hitch in between, and thank you, everyone. Thank you, Mark. Thank you, Brother Anthony, Isaac, Matthew, and Shuklaji for taking your valuable time out and being present here. I really appreciate your kind presence. I hope you enjoyed and it would be useful. Euro USD on the long side, gold potential short and then long, dollar index on the short side. And yes, thank you, Matthew, as well. And thank you, Brother Anthony. You guys are the best. Because of you, these sessions are going on. God bless you all. And we would expect your kind support continued way. And it's all great pleasure to have you all here. Shuklaji, thank you very much for being present all the time and kindly help us spread the word as well. We are now present on the GTCFX website as well into the webinar sections where you can register for all webinars. Now the next English session is on Tuesday where we are going to resume season 2 now. We are going to start season 2. So it's going to be a good revision for all of us. Kindly be there and until that time, once again, take care and God bless. Thank you. For all those who have joined us from YouTube, thank you as well. And until the next one, please take care and God bless. Goodbye.